Holly jolly Christmas.
Okay, happy Friday. Weekend update, holiday edition. Pro tip, Brett Eldridge. I would like to see a holiday sing-off between Brett Eldridge and Michael Bublé. It would be epic. That's my Christmas wish. Hope you had a great week. Want to go into a few things, and I'm going to show you, like I did last time, as I fix my tablet, the links that I'm talking about. I want to tell you why these stories are important, give you the links to them, have you check them out yourself, so you don't have to just take my word for it. But I got to start that by getting my face out of the way and muting that call. Okay, so here we are. In the update, you're going to see some good news. We have consumer sentiment is up and kind of reaching really awesome all-time levels. But we're going to get into, that's the perception. We're going to get into the rate reality a little bit in just a moment. So here's my dashboard. Big things this week and bigger things next week were CPI. Basically, the benchmark for inflation came out. This was Wednesday's story on CNBC. It's expected to show that progress on inflation has hit a wall. That link's down below. You're going to get some information in that link about what was anticipated. And the good news is it came in as expected. The core CPI, which you can see if you watch the video here, you see, I mean, that was established in the 1950s as an index, and prior to that, it was the headline CPI. We're talking like 1913. So we're not talking about new school here. We're not talking about Doge. We're talking about how we've looked at inflation for over a century, guys. And it's still quite warm. I don't know if hot would be the right term, but it is sticky. It is still causing prices of all the goods and services you and I pay for to remain challenging for household incomes, which that's the data. Here is the sentiment, guys. And this is an important one. These next two, I think, are super important for you guys to look at. What's the vibe like? What are people thinking? And if you look at the November report, it increased the home purchase sentiment index. This is a Fannie Mae index and study that's done. Ticked up 40 basis points or 0.4% to 75, and it's a sharp upward trend year over year. What did I have here? Last November, 14% of folks thought it was a good time to buy versus 23% this year. So almost doubling up there. But because you guys are probably doing both purchase buy side representation and listing representation, this is a pretty astounding number. 64% on this survey said it was a good time to sell. Also interesting in here, if you scroll down, something I want to draw your attention to, because it's going to be a big topic next week when the Fed meets on Wednesday and announces their rate decision. So you've got the good time, bad time to buy, home price expectations, and then this part is pretty interesting, the mortgage rate expectations. So we had an increase in people who thought that rates were going to go down next year in the next 12 months from 39% to 45%. So more people thinking rates are going to go down next year, month over month. And then we still have a percentage of people, though, that increased to 25%. So 1 in 4 think that rates are actually going to go up next year. So as a result, net share of those who say mortgages will go down over the next 12 months increased 4 percentage points to over month to 20%. So the interesting fact here is that if 1 out of 5 people think that rates are going to go down next year, that means 4 out of 5 think that rates are going to stay the same or go up. And if we're dependent upon what investors do, what the Federal Reserve does, what monetary policy does to make rates go down, well, that's on the next story I have for you. About what impacts 30-year fixed mortgage rates, what does not, aka the Fed funds overnight window rate, does not impact that. And I think you guys, if you want to level up your response, your information, your intelligence on the subject of what's actually controlling 30-year fixed mortgage rates from a market level, and I mean market is in trading here and trading here, I think you need to read this next link that I put in here for you. And I want to ask you guys a poll. 2 things. I think we're going to put out a poll about what you think interest rates are going to do next year. And I also am really interested to know which of you guys would attend a webinar or lunch and learn from us on what factors are actually playing into mortgage rates, how we can deal with that at the market level for us. That's buyers and sellers helping create more affordability, things like list and lock. But this is where we were. I kept this out. This is where we were towards the end of last year, October. This is the 10-year treasury yield, as high as it had almost ever been. And we saw rates close to 8% on a 30-year fixed mortgage. So we made some progress, right? We definitely made some progress. And then, ebb and flow. But what I really want to drill into is when the Fed started lowering interest rates right here, September 17th, I believe it's blocked right here, of this year. So we the expectation was Fed easing was coming. Rates were going to be dropping from a Fed funds level. And so as we started anticipating that and started anticipating rates finally start to go on the decline from the Federal Reserve, we saw marketable rate improvement. On this date, they confirmed it and they dropped rates 0.5%. And look at this trajectory from September to now where rates have gone. They're almost to their highest point since they started dropping rates in September. They dropped rates another quarter in November. And we're anticipating a 0.25% rate cut since inflation was in line with expectations earlier this week, that they'll go ahead and make another cut to finish off the year of a 0.25%. There's your graph. There's your data. Here is the story. What determines the rate on a 30-year fixed mortgage? This is 5 minutes, guys, to give you guys a ton of information about what actually constitutes a 30-year fixed mortgage, what the difference is, what the spread is, compression that we've dealt with. Really, really helpful to spend a few minutes to read over this. If you have any questions, feel free to give me a call. I'm always happy to break down what my guess is and my expectations are. But I know quite well why the rates are where they are, not necessarily where they're going, but what makes them and what's not going to drive them lower. And that's not really the decision that's coming next Wednesday. As always, I appreciate you guys watching. Thanks for spending a few minutes with me. Take a few extra minutes, dive into this, answer poll questions. If you don't follow us on Instagram at Lending Perspective, more is going to be done on our YouTube channel, Facebook, and LinkedIn. Please connect with me. I love the partnership I have with you guys, and I love to help you however I can. We're almost to Christmas. Play us out, Brett. Talk to you guys later. Have a great weekend.